couple weeks ago, everyone was stuck in thoughts about prolonging recession. Right now, there is a bull market nearly everywhere, with S&P 500, US 100 and DJY and many of emerging markets at the door of 20% from its prior year lows, or even above, with relation to where we are. So the central bank's policy rate right now are possibly getting us to spoil the party when this assessment of having this pause but still wondering about another hikes is stopping possible momentum for a while. So right now the policy rate reaching 5%, the one that is influencing households and businesses around the country, and in terms of CBOE around the European Union right now is onsetting somewhat that we may call a maybe not even a period that will lead to a robust phase of a economy, but rather more like a stagflationary one when there is a still higher inflation and interest rate that's right now staving off the GDP growth. So in a press conference at the end of the central bank's latest policy meeting, Fed Chair Jerome Powell described that the US growth and the job market is holding up better than expected under the weight of the aggressive monetary policy tightening of the past year, and right now they are likely lengthening the fight to lower inflation, but also letting it proceed with less economic damage. So that's exactly the position. And so that was the kind of a prolonged preludium of what this episode of Blockrevision is about to tell us. Let me find out whether everything works fine. So I'll just get through a couple of windows. So I wanted to check out. So we don't have a chat. Let me find out what's going on with chat. Do we have a chat right now? Let me know in the comments. Yes, the chat is on. So without any further ado, let's begin and let's jump to an intro. All right, so we are right at the Economy View blog. We are live, so you can post questions whenever you like, and without telling many about the markets, let's head first to what happened on firstly Fed's meeting and after CBOE meeting. So taking the position of Fed. Right after Wednesday's meeting, Federal Reserve decided to leave interest rates unchanged, and as you can find right here on the slide, holding the target range steady at this meeting allows the committee to assess additional information and its implications for monetary policy, the post-meeting statement said. So the surprising aspect of the decision is about this dot plot that right now the market was assessing that we are right at the cutting phase, very close to the cutting phase, and the Fed, to surprise many, decided to not just tell about no pivot right now, but also about possible turn to the hike side of a coin. So that's something that hasn't been counted yet, and something that may somewhat remind many to what we were going through in 70s, where this scenario looked like when the Fed paused after its first phase of inflation. Inflation started picking up again, and Fed needed to take double effort with this cannon fodder that was citizens' money right on the table, when they cannot really put a stop too early. But that's the one of the decision that is on the one side kind of a controversial, but on the other hand looks like the economy is still not very stable. That's why they decided to put the pedal of the metal. So about the pivot, we don't kind of expect anything like that. The market is surprised, and that may spark the sell-off we were talking about previously, and talking in this episode's thumbnail. That's what I expect, and I will explain it once again during our market movers session and trade idea. All right, so let's jump to the expectations of a market. There is no time for relief, as the market is right now expecting another hike. So this pause is right now just a temporary one in a view of a market. That's why we do expect more downside trajectory after this very nice rally in the second quarter of a year on many of indexes. So 71.9% is the probability assessed by the market that will have a 425, 525 and 550 in the July's meeting in 41 days. That's why it will be a very volatile period ahead, with no certainty right off after. What about ECB? ECB is catching up. Fed delivering another interest rate hike of 25 basis points today in the morning, and European Union right now is trying to get to this 5.3% core rate with a possible ECB's target at 2%. That is of the market right now. So 25 basis points bringing another 25 basis points bringing borrowing costs to the highest level since the financial crisis. Investors will be still watching very carefully the guidance provided by officials, as this trajectory hasn't been put to an end. So Christine Lagarde also says that their aim of getting the inflation to this 2% goal remains unchanged, and the hints regarding the potential peak of interest rates right now are off the table. So the ECB right now is continuing its fastest tightening pace in the bank's history, leaving this 400 basis points right now been risen in a very fast manner. What about the markets then? So let's find out in a market outlook. So I will just send you to SPY. SPY, what's going on SPY? So we are right after this Fed's decision. So the market hasn't managed to react to it in a taking the longer time horizon. That's why it's bringing like more like indecisiveness with a sell-off and right after the trial of a return to previous valuations. But normally when something like a jolt on the chart happens, it's normally and most likely the possible eventuality of building a reversal moment. Also with this dragonfly candle, we may be rather thinking of a reversal rather than a continuation. It would need a much more strength for now to push it higher, especially with this negative rhetoric. It would be very difficult to push it through. Right now we are achieving a very important for us threshold of 440, where this as we can find, this supply may start picking up, and that's why I would be very cautious in terms of bull side, and possibly thirsty in terms of looking for a signs of reversal and betting against SPY in the coming days. The possible chance for the reversal will be kind of a bearish type of a reaction right at this highs of 440, sorry, where I would maybe start thinking of betting against SPY. But right now the types of a reversal hasn't been so the signals hasn't been triggered yet. We still have a undistorted high highs, high lows tendency. That's why the bull market still persists, and betting against it right now is premature to me. All right, so that's SPY. What's about US or QQQ? So on QQQ side, there's bullish momentum is even more visible. We tried to retest the previous highs, but the things doesn't look that good at US 100. That's the CFDs on US 100 that are right now rejecting that threshold, and right now we are sent to lower levels that have been aligned with yesterday's levels. So we are building an inside bar inside of this range, and the QQQ is the one that I wanted to point that we haven't crossed on QQQ the highs from Wednesday. That means that we are more likely that that's kind of a more like a double top formation rather than any type of continuation. So US 100 right now is under the threat of a possible reversal. I do expect the possible return to this levels of 15,000s, and right after we may try to look for retest of 770. All right, so that was the insight into the markets. Right now we are been going through the presentation. So if you don't have a clue on where the market may be going, just look at the Fear and Greed Index represented and constructed by CNN. So right now, exchange rate is nowhere near from a good position to setting a long positioning. That's why I would seek once again repeatedly the possible return of or reversal in terms of major indexes. The question is new or old stinky bull. So right now we've been going through very abruptly on growth stocks that have been represented by many of those AI companies, but this representation right here, the chart, doesn't take the previous rebound of the value stocks that also has been dragged by the previous sentiment, but much of this year's stock market rally has been driven by only a few technology stocks, and right now, if kind of a reassessment in whether it might be a new bull market, we need a much bigger engagement of other companies. So we need the participation of other sectors as well, and narrow market breadth is not sustainable over the long term. Yes, so during the beginning of June, this situation started to improve a little, but it's still the breadth is nothing that good. But it also after this June's price action, we may say that it gives us a kind of a hallmark of that the market is absolutely out of the positive sentiment driven, and that's why the sectors may not be as so the growth of the sectors maybe not get very resilient, but regarding the sentiment, these things are starting to improve. But the time will tell whether there's the rally driven barely on sentiment, mainly or foundations as well. So this concentrated market rally may bring much more of a surprises on the way to go, and that's why this market that may resembling a kind of a yo-yo moves is not that far out of the description. So that's why we are right now dealing with kind of a many turns, ups and downs on the way. All right, so right here we have a crypto outlook, but I haven't have at any of particular news out of the SEC side after these regulatory issues. But I wanted to just point out what's going on the crypto side of charting. So BTC, USDT, is this chart that right now is breaking head down from this falling wedge. So this price action of lately hasn't been really encouraging. Right now we are also having this validation right now of a previous highs, but I guess it's not very strong right now, and I would expect it will rebound out of this EMA 200, and right after retesting this 25.6, I would expect the really downward, especially that it wasn't tested very firmly. Yes, it was back in March been tried to test, but we have much more liquidity right here, and the possible order flow should send us to the levels of 24, at least 24,000. For now, I don't expect that Bitcoin would be able to really restart its bull rally from here with its price action really pesky one. I would wait for some signs of a reversal, but it may take a while, and this summer may not belong to altcoins, as altcoins are even more risky than the orange coin one. So that was out of the crypto. Right now, let's get to market movers and what we have right here. So earnings whispers say that we have out of this week just Adobe that I wanted to take our spotlight to. So Adobe may surprise many, but it needs, as it has not very large market capitalization and not very large chunk of its positioning in SPY and US 100. It needs really astounding results in order to revert its latest the index latest negative positioning. So Adobe is the company that should beat earnings, especially that we have expectations kind of lowered. So it should beat it, but in terms of sending the index and even the bunch of indexes higher, it would need really an astounding power as possibly Nvidia had. But Adobe is definitely not Nvidia, and Nvidia is the one with the foundation that is really giving the real ignition to many of indexes. Right now, Adobe is the only one marginalized company that right now don't have much of a impact on those major indexes. That's why we should expect better earnings, but it's still not too far to say that Adobe may rescue the indexes and send it upside. Right now, let's head on to economic calendar. That's that window. And on economic calendar, what we have right here, we have Thursday. Let's jump to this week by large. So on Wednesday, we had many data, as you can find. So let's look at GDP growth rate from New Zealand, as we have had those already discussed. Yes. So from New Zealand, GDP growth rate is reaching 2.2%. So it's up. Unfortunately, surprising to the downside. New Zealand's economy advanced by 2.2%, but the expectation was at 3%. So right now, New Zealand also cannot really recover after this much more difficult time of 2022. So it was GDP growth rate out of New Zealand. Right now, let's jump to China. Industrial production also slowed down. That's why the commodities should have a tough time ahead. In terms of Thursday, we had deposit facility rate out of Euro area and import prices from US that's turned out worse. On the other hand, retail sales are a bit better than the forecast at 0.3%. We are still waiting for industrial production that should come up anytime soon. And tomorrow we have some Fed members' speeches that's worth listening, that I will go through with you tomorrow. So right now, economic calendar showing that we are right after the most important events, and the price action should stabilize and take turn within next sessions. That's why those might be the decisive moments for position takers. Industrial production month over month just popped in, and from US it looks like it has collapsed from 0.5 to minus 0.2%. That may also spark downward momentum for indexes. Also, industrial production year over year has collapsed. So it looks like the index may have much more slack performance in the sessions to come. What's next? We have